Do I need 20% down to buy a home? I think a lot of home buyers are under the impression that you have to have a lot of money saved up in order to purchase a home. And unless you have this magical 20% figure in hand, homeownership is out of reach. That's simply not true. Yes, having a large down payment has several advantages, but in most cases you can buy a home with a much lower down payment, and in some cases, no down payment at all. So let's explore the mysterious world of down payments. Hi, I'm George Poperad with eXp Realty, and today we're talking about down payments. So first off, what is a down payment? A down payment is an initial upfront payment made towards the purchase of a home. A mortgage loan is then used to pay the remaining balance for the purchase price of that home. A quick example, you are buying a $200,000 home and you make a down payment of $20,000. So you would then take out a mortgage loan for the remaining balance of $180,000. Got it? Now, different mortgages will require different down payments. The four main types of mortgage loans are conventional, FHA, VA, and USDA. Conventional loans are the most common type of mortgage loan. They are simply loans that are not backed by a government agency. Instead, they are originated, backed, and serviced by private mortgage lenders such as banks, credit unions, or other financial institutions. Now, for conventional loans, the ideal down payment is widely considered to be 20%. Conventional loan down payment requirements for primary residences will vary depending on which individual lender you go with. Some lenders might require you to put 5% down, while others may require only 3%. Again, depending on your individual lender and your credit score, down payment requirements for a conventional loan will vary. Now, I'll get back to the exciting world of down payments in a second, but if you are taking anything away from this video or any other videos of mine, please hit that like button and subscribe to my channel here on YouTube. I do try to post new and helpful content regularly. Okay, so we've talked conventional loans, but now let's look at FHA loans. FHA loans are mortgage loans insured by the Federal Housing Administration. These loans are designed to make homeownership more attainable for first-time homebuyers, low to moderate income borrowers, and those with less than perfect credit histories. One of the most appealing aspects of FHA loans is the lower down payment requirement compared to conventional loans. This allows borrowers to become homeowners with a more affordable upfront investment. The minimum down payment requirement for an FHA loan is 3.5% of the purchase price or the appraised value of the home, whichever is less. For example, if you are purchasing a home with a price of $200,000, the minimum down payment required would be just $7,000. Because of the lower down payment requirement, FHA loans can open doors to homeownership for many individuals who might not qualify for conventional financing. Next up are VA loans. VA loans, which are backed by the U.S. Department of Veterans Affairs, are mortgage loans specifically designed to assist active duty military personnel, veterans, and eligible surviving spouses in achieving homeownership. One of the most significant advantages of a VA loan is that they generally do not require a down payment. Eligible borrowers can finance up to 100% of the purchase price or appraised value of the home. That means that qualified individuals can become homeowners without making a down payment. However, it is essential to note that there may be situations where a down payment is required. For example, if the purchase price of the home exceeds the VA loan limit within a certain area, a down payment may be necessary for the portion exceeding that limit. Additionally, some borrowers with low credit scores or other risk factors may be required by the lender to make a down payment in order to secure the loan. Now, the last type of loan, USDA, isn't as common because USDA loans are backed by the Rural Development Guaranteed Housing Loan Program, which is a division of the United States Department of Agriculture. These loans are designed to assist individuals or families with limited income to purchase a home in designated rural or suburban areas. Similar to a VA loan, eligible borrowers can finance up to 100% of the purchase price or appraised value of the property. However, it is important to note that while a down payment is not required, borrowers may need to pay upfront costs, including closing costs and upfront expenses. To qualify for a USDA loan, borrowers must meet specific income limits, and the property they intend to purchase must be located in an eligible rural or suburban area. The USDA does provide a mapping tool on their website to help check the eligibility of a particular address. Now that we've seen that a large down payment isn't necessary to purchase a home, you might be wondering, what are the advantages of a larger down payment? For one, lower monthly mortgage payments. Making a larger down payment reduces the loan amount, resulting in lower monthly mortgage payments. With a lower monthly mortgage payment, you can potentially free up more of your income for other financial goals or expenses. Advantage number two, equity. A larger down payment helps you build equity in your home right from the start. Equity is the difference between your home's value and the outstanding mortgage balance. Having more equity in your home can provide financial security and more flexibility in your future, such as when you're considering home equity loans or refinancing options. Number three, avoiding private mortgage insurance. If you make a down payment of less than 20% of the home's purchase price, lenders will typically require private mortgage insurance, also known as PMI. PMI. However, with a larger down payment, you may be able to avoid the additional cost of PMI altogether, saving you money over the life of the loan. Number 4, improved loan terms and interest rates. Lenders consider your down payment amount when determining your loan terms and interest rate. A larger down payment may make you a more attractive borrower, potentially leading to more favorable loan terms and a lower interest rate. This can further enhance your overall savings and financial stability. Having a large down payment is often a good idea, but it is not necessary if you're hoping to buy a home. With as little as 3% or even 0 in some cases, you can make owning a home a reality. If you're thinking about buying or selling a home here in the Cleveland area, or if you just have some real estate or home related questions, reach out, let's have a conversation. Thanks for watching.